Okay lah.
Hi, good afternoon, everyone. Honestly, I'm a bit surprised to see people here because I thought people would be having their reunion dinner. Most of you, or you're just about to have your reunion dinner. All right. So before we even start off the session, Alexis and I just gonna wish you all a happy Chinese New Year. For those of you who are of working, be generous, give out a lot more ang pao. For those of you who aren't, be happy receiving it. And let's hope that for the year of 2026, the market will be generous to us and give out a lot of profits to us all. All right, hi Jackie. All right, so with that, without further ado, for those who are new, Alexis is concentrating on fundamental updates. I'm concentrating on technical updates, specifically using the currency strength index. All right, so with that, without further ado, let me jump to my trading view. All right, so I'll just give a brief explanation. What is currency index? Is that it is a basket of currency it, that is weighted against the yen. Yeah, so it's like a yen ETF of sorts. So if usually people who wants to trade with or without yen, with the yen or without against it, they would, for technicians they might probably look at the indexes itself. Yeah, so that gives the most accurate picture of all. Secondly, I'm a swing trader, so I always look at the weekly chart to give me a view of what's going on. Yeah, so this is a zoom out view. So with that, my usual style is that I will pair this, usually position the strongest on top. I There are pairs which I don't know what they are doing. I'll put them in the middle, and pairs which I think they might possibly weaken, I'll put it in the below. Yep. So that's how I do my weekend analysis. So with that, let me jump to yen. So you can see that the yen currency index, you can see is possibly bouncing off a double bottom. Very very nice technical, right? And with that, you can see that this is a very very nice looking engulfing bar. Yeah, if just a bit more, it might just engulf the past two bars. So now, of course, please don't ask me anything about fundamentals, or I'm just is looking at lines on the chart and bars on the chart. With that, there's a good possibility that yen might actually strengthen all the way to, let me see, $67 or even all the way up to $70. Yeah, so there's a pretty good run out there. Now, for daily and swing traders, I think if it does if the setup does happen, you can happily hop on the car for it. So second on my list is actually the Kiwi index. Now the Kiwi index, now although I use round number $60 as my horizontal levels, this is a very very nice psychological levels in fact. But the fact is that I cannot ignore that Kiwi in the past is still very very messy in this zone. Yeah, so I got to admit that this is not a very, very nice psychological level to deal with. But we can see that in the past, although it's messy, it does it does have a late bounce of this area, and it might peak above all the way to 63. So you can see that Kiwi has a weak break. The following week tried to stay above, hence that leads to my conclusion is that it might actually go all the way strengthened up all the way to 61. Yeah. So Kiwi second on my list that it might strengthen all the way under here. On the other hand, pound is really in the middle of nowhere between 140 and 130. This might look like a very nice short-term horizontal level that we have here, but until Powell proves to us that where it might want to go, because you can see that the previous week, in fact, 2 weeks back, it did have a rejection. It stayed below it, but wasn't really a good bar to bank on. And then followed by the last week, we have a doji. Yeah, so it does wants to break, but we don't know whether you want to break to 140 or 130. So with that being why I rather stay off pounds way for time being, unless you are looking for a breakout trade. Now Swiss is really interesting. You can see that in the past 1 year, past 2 years, in fact, it doesn't even reach above 130. Yeah, so price comes here, you can see that it got gapped down and then it comes to here again. So for some reason, it does want to stay at this level. It might want to go above it, but unless it gives a very, very decisive break, I prefer that we stay out of it. Again, unless you are trading within a range and waiting for a breakout trade. Yeah, so pound Swiss, I'd rather not touch it as a swing trader analysis. Now, euro and pound having very similar sentiments. You can see that at this level, very short-term horizontal level that we might have here, and even if it does goes up, I would say that it has a very short distance to 120. So with that, I'd rather stay out of its way until it gives us a very nice rejection again at 120. Then I might trade it down all the way to 115. Now Aussie on the other hand, it has gapped up. Now for pairs, it has gapped up a very nice looking psychological level, which is 70. I'd rather it close the gap, come back and retest, then I might trade it up against. Now, for a very long time, all right, so this 2024, even 2023, you can see that it has not reached up above 70 for a very long time. Now, it might have something to do with its gold or even commodities pair characteristics. I do not really know, but as a price action trader, as a technician, I'd rather you wait for retest to this level, and then I'm more interested in trading upwards. Yeah, for a time being, due to the ugly looking rejection candle we have over here, I'll prefer to stay out of this way. Now let's come to the most important of all pairs. Yeah, I don't think anybody would say that I'd rather not trade the dollar because it's really so price heavily against everything. Let's see what dollar has been up to. Oops. Now, you can see that just to be more clear, this is if we absolutely cannot ignore this horizontal level. See, it has rejected once, twice, third time. But let's look at what happened in the past. In the past, when it comes to this level, we have a very clear-cut bounce off this level. Engulfing, you can tail bar, and then it goes to a bullish bar, tail bar, bullish bar, and then a bearish bar that comes back to retest this level. Yeah, so it has not happened in the past, at least 3 months, 6 months, in fact. Yeah, it has not happened in the past 6 months. So what I suspect might happen is that due to Donald Trump policy, dollar might further weaken, even though I don't think that's what he intended for the time being. I'm not too sure if that, but whatever it is, it seems that price might want to break $96, and then for the swing trader, be it the daily or 4-hour chart, we carefully wait for a retest for it to go down again. Yeah, so this is simply a bearish bar, a rejection of this level followed by a retest of this level. Now it seems that, and look at the past price action, pretty bearish, I would say. So it seems that price really wants to head down. Let's give it some merits. Now, Cat is just simply screaming that I want to go low. Why? You can see that even from last year, September, all the way till now, which is a good 5 months, it has tested this level 1, 2, 3, 4. This is the fourth time. We might say that this is the fifth time within a span of 2 weeks, 3 weeks, in fact. So I'm giving it a grade of really bearish that it might want to come down all the way to 72. Yeah, so this is a good run for a 4-hour chart. So with that, let's look at how some of the pairs are setting up. So against yen and kiwi strengthening, possibly strengthening, dollar and cat possibly weakening. So let's pair the weak against the strong. That's how we would do it. Cat yen first on my list. For our chart, there. So cat yen, very nice double bottom, and then you can see that price from here, we have a pretty consistent lower high. I'm just waiting for price to actually break this nice looking double bottom, a break and retest, and I will go short at it. Yeah, I won't immediately go short, but really my standard way of trading, for those of you who have been listening to this for long, is really a break and retest of any level. If you don't know what's a break and retest, what I'm saying is that simply I'm waiting for price to give me a lower high. A lower low and lower high, I'm pretty happy to go in. That's cat yen. So Kiwi, I'm looking, okay, again back to it. Kiwi, I'm looking to strengthen, and Cat looking to weaken. So as such, Kiwi Cat, same old story. Nice looking level. You can see that touches 1, 2, 3. So for those of you who recognize this is a wedge, I'm waiting for price to break this nice looking horizontal, retest this level and go up. Again, if you don't know what is a break and retest, for those of you who are new, I'm simply looking for a higher high and higher low at around this region. Yeah, I wouldn't say it's a line, it's always a region. a break and retest or higher high and higher low, and this is where I'm happy to go in. If really price just really dongles between here next week, I'll wait for a break, really a clean break before I go in. Kiwi dollar, more or less the same story. I can draw a line to connect it, but you get the idea. Waiting for price to give me a higher high, higher low around this region. I'm happy to go in. And the last on my list, which is really, really pairing the weakest against the strongest, you can see that dollar yen and cat yen has I think very similar looking chart. Yeah. So when it happens, don't pounce in both at the same time. You might just have a double restrict. Yeah. Choose one which you think is set up the most nicely. So again, giving me a lower high, a lower low, and lower high around this region, and I'm happy to go in. Yep. So this is my analysis for the week ahead. With that, I'll hand it over to Alexis and let's hear what she has to say about fundamentals.